Hi guys, and welcome back to FutureFunded. So today I want to be going through one of the most crucial elements of what's actually going to make you a successful day trader. If you think you can describe it, it can be described in one simple word: confluences. Confluences, if you don't know by now, are the very actionable things that you need to be able to actually enter a trade. See, we can't just enter any old trade, otherwise we're not necessarily separating ourselves from gamblers. We need reasons to actually enter the market. Those very reasons are defined by things called confluences. Confluences are essentially a tick sheet of various different ways that you can enter the market. Depending on what strategy you have, for example, I use a simple SMC strategy. I need at least 4 to 5 different reasons to actually enter, whether that would be higher time frame structure, going into lower time frame structure, whether that be things such as point of interest, liquidity sweeps, breaks of structures. These are all of the elements needed to indicate whether you're about to take a high probable setup. If you don't have these indicators, you're probably not taking your edge. And that is the thing that's going to differentiate between actually taking your strategy or just taking an unnecessary trade that doesn't really mean anything. Now, I'm Luke Heinrich. I've been trading for over 5 years. I've probably seen everything there is to see when it comes to the good and bad of trading. I've blown millions and millions of different accounts. Trust me, I've even got my own channel showcasing that. So when it comes to high probable setups and how the markets actually work, I do have quite a deep understanding of the psychological aspect that you're going to need to implement to be able to trade. Now, a lot of people can say, oh, well, just focus on your analysis, but your analysis doesn't necessarily define everything when it comes to trading. Sure, you need your confluences, you need reasons, but at the same time, most importantly, you need the right approach. You need to be able to be focused. You need to be able to live in the moment so that you can execute your plan correctly. That's one of the most important things. People are so focused on the analytical side of things when it comes to technical analysis that they forget that they need the right approach. The only way to get the right approach is by developing good habits on a day-to-day basis, staying consistent to them. And if you do stay consistent to them, you can then be consistent to your plan. It's all well and good me telling you about all of these confluences that you're going to need, but the reality is you actually have to be the one to implement them. No good just having them down on a tick sheet, because 9 times out of 10, most traders don't even look at their tick sheet before they actually enter the market. Why? Because they are so focused on the trade itself that they forget and they miss out the most crucial elements of their strategy. So yes, it is one thing being able to have these confluences in the first place, but knowing how to effectively use them in different market conditions and being able to understand what your edge is, when your edge is most present, what days your edge is most likely to come out, and most importantly, what sessions your edge is most likely to be present. Then once you start to chip away the fat and start scaling down into those specifics, you can then focus on the confluences that you need to enter the market. For example, with my confluences, I need a break of structure, I need a liquidity sweep, and I need price to be at a point of interest, which needs to be in line with higher time frame structure. Now, in order for me to have all of these things, I need to be trading at certain times where that is most likely to come true. For example, with my strategy, I only trade the London session. I look for sweeps at Asia low or Asia high, as I believe that is where my edge is most present and most likely to play out. Now, that doesn't necessarily mean that it's going to do it there. It just means that based upon the data that I've seen and the probabilistic view that I have on the market, it is most likely to occur at that time. So how do you know when you don't have a high probable setup? It's very, very simple. The moment you step onto a chart, if you know your strategy well enough and if you know your confluences that you need to enter the market, as soon as it looks confusing, that should be the first red flag that you need to say that you shouldn't be entering the market today. Your edge is most likely not going to play out because you don't even necessarily understand what you're looking at. Now, that doesn't mean that you don't understand trading. It doesn't mean that you don't understand how to read charts. It just means on this particular day, there are a few too many elements that are going outside of your idea or your narrative about how the market should play out. If that is to be the case, step away, come back tomorrow when the markets look cleaner. There are so many traders out there, including myself, who will happily miss days of trading, even if there's just one element, one confluence that is missing, that doesn't look clear to them. They'll pack it up, they'll step away from the chart, and they'll come back again tomorrow. That is the crucial aspect that you need to implement. You need to have the discipline and the ability and the patience to sit on your hands like I'm doing right now and do nothing. If you can do that, you're more likely to stay calm when your edge is getting close. And what are you more likely to do once your edge comes around? You are more likely to implement and understand and execute all of the confluences before going into that trade. Most people don't even look at their confluences, and then it's only until after the trade has actually happened, or only until after the trade has actually taken place, whether that be win, loss, or draw, that they realize that they missed something. So they go back and they think, well, did I really take my edge? Did I really take that high probable setup? Probably not. Their emotions got in the way. Confluences can only take you so far. The rest of it is just about your mindset. You have to be able to actually read your confluences and know exactly what you're doing step by step before you enter. Because once you enter, that's the easy part. Getting up to that point is the hard part. Take a step back. Focus on your high probable setups. Take as many confluences as you need. Don't overwhelm yourself, of course, but at least have enough reasons to showcase to yourself after the trade happens why you entered and whether you did the right thing. Now, if you can get to the end of the trade, regardless of the result, and you can say to yourself, this is the reason why I did this, and this lined up with my strategy, which said or told me to do this, and this, then you have nothing to worry about. The markets are random. We are all at the mercy of random distribution, which means we don't know which order our wins and our losses are going to come in. So all you need to do at that point is tell yourself, I would take that trade 100 times more. If you are missing something, or if there is something that you have missed out, and you realize that that might not have been the high probable setup that I was looking for, in hindsight, that's when you know you have work to do. That's when you know you need to go back, review, look to improve. Because like I said, guys, confluences are great, and the more you have, the better. But at the same time, if you are not following them, or if you are following 80% of your confluences, then it's useless anyway. So how are we developing these confluences in the first place? First and foremost, what you need to do is go back test, take a step back, review the data, actually get proof of concept, get proof that the confluences that you are writing down showcases that it works over a long period of time. I'm not talking about on your next trade, or I'm not talking about come the end of the week. I'm talking about come the end of the quarter. If you can see that that very confluence that you've implemented into your strategy has showcased or has shown you that it wins more often than it loses, or that it can make money even if it loses more often than it wins, then you know that you can implement that into your strategy. But what you can't do is just add any little thing here and there just because it looks good or you feel like you understand it. Test it. That's the most important thing. Test everything that you put in. And yes, test everything that you take out, because ultimately you might just be going for a losing streak, right? Let's say you are going for a losing streak. You don't particularly like one confluence, or you feel as though this one confluence is causing that losing streak in itself. You take that confluence out. Well, hang on a minute. You've just stripped away one element of your strategy, but you might just be going for a down cycle. Market conditions might just be different. That doesn't necessarily mean that that confluence is wrong. It just means that it might not be adaptable to this particular market condition that you're in. But this market condition might only last a few weeks before it goes back to a different condition where that confluence does work. This is why you have to showcase and you have to test it over the long period of time. You have to test it over a 6 to 12 month period so that you can go through these down cycles and not change anything. That's one of the most important parts. Going through bad times and still doing the same thing. That's what I believe makes a consistently profitable trader. Look, everyone's got their way of doing it, right? But if you are taking things off, stripping things away, as soon as you go through losing streaks and so forth, then you are essentially starting something else, and you're having to now adapt to different market behavior, and it's challenging. You have to go back and test it and so forth. Whereas if you've done the back testing, if you've done the reviews, if you've done the data, if you've seen everything over the long run, and you can categorically say all of these confluences will work over a long period of time and I will make money on a consistent basis, then it can give you that confidence to take a step back, embrace your losing streaks, not change a single thing, and stick to the high probable setups. And look, this is the very thing that changed everything for me, right? I was one of the most inconsistent traders going. I used to change everything. Every time I went for a losing streak, something would change. Every time I took 2 losses in a row, I would think that my strategy doesn't work. But the reality is the strategy is not designed to work over 1 or 2 trades. It's designed to work over maybe 20, 25, 30 trades. And once I started to get that into my head, nothing changed. Now, don't get me wrong. I refine my strategy, right? I look at ways to improve and so forth, but I don't change anything to do with it because my strategy is now my bread and butter, and I trust it and I'm confident in it, and I will only ever wait high probable setups. Guys, this is just some of the things that we're teaching you on FutureFunded. We'll be back for more educational tips and hints all the time. I'll be going into much more in-depth about FX markets, future markets, and I can't wait to see you on the next one. And if you found that useful, don't forget to click that subscribe button and click the like button just to keep the content going. We want to make as much content as we possibly can for you guys.